to break it down? Because, Mike, we got a couple holidays, we got a half day, and dare I mention, I said it, the theta bleed.
Yeah. Well, that's actually a great point. So, when you take a look at the VIX, what is it? It is basically a 30-day look ahead on the implied volatility for the S&P 500. But one of the things that you just pointed out is that over the course of the next 30 days, we've got a couple holidays. We've got a half day next week, a full day off, and then we have a full day off the subsequent week. The bond markets actually have a little bit more time off than the equity markets do. And if you adjust for those things, I think that probably a truer measure of where the volatility index is right now is probably 18.5 to 19. And I would add to that if you look out to the options that expire at the end of January, one of the observations you will make is that the wings, that is the downside out of the money puts and the way out of the money calls, have gone up even more than the at-the-money options have. So it does seem like options prices are anticipating some more choppiness than we've probably experienced over the course of the last 6 months. And I think that part of that stems from the fact that we have seen sort of a roll-off going on in some of the hardest performing sectors year to date.
Yeah, I think that's right, Mike. And I think you got a dynamic where if you look back to where we were last year, the best of the holiday Santa Claus rally guy, you like that term, right? Ho, ho, ho. Happened really up through Thanksgiving. And December was choppy. And then we came into January, and there were some dynamics, obviously, that still were very uncertain. What's interesting about 2026 is a lot of people actually feel policy-wise we're following through. Are you seeing anything further out there, Mike, in 26 that says things really calm down as you get into the first quarter?
Calm down in the first quarter. Well, certainly not, I would say, through January or February. I mean, right now, I would say that, it's kind of calm at the surface, but it's those wings that have been getting bid up, which essentially indicates that there is sort of this increased alertness, if you will, that something big could be coming. Doesn't mean it will necessarily. And, in general, I'm a bull on the market most of the time. But I will say that it does seem like there is some gurgling under the surface, as if some of that holiday indigestion is showing up a little early.
Well, we do. I mentioned it, Mike, very quickly. We do have a president that's going to make an announcement tomorrow night about we don't know what. There's reports that maybe it has something to do with Venezuela. That would seem to be some kind of a coiled spring. Is the options market expressing any of that?
Yeah, well, I think that's exactly what this is probably indicative of. Those types of sort of macroeconomic uncertainties are exactly the kinds of things that get options prices on broad-based indices like the S&P 500 elevated, because that's going to be where that is going to show up most broadly. So, from my perspective, it seems like there is a little bit of concern about these kinds of announcements, and, there could be a knee-jerk reaction that happens to risk assets as a result of it.